The Las Vegas housing market just shifted again, and most people haven't noticed yet. Inventory is rising, buyer demand is changing, and affordability is actually starting to improve. So the question is this the moment buyers finally get some leverage in the Las Vegas housing market? Let's break down exactly what the latest data shows. If you're new here, my name is Michael Coxon. I'm the broker owner of Magenta Real Estate here in Las Vegas. And every month, I break down the Las Vegas housing market. So buyers, sellers, investors, and people thinking about moving to Las Vegas can understand what's actually happening because real estate headlines can be misleading. Today, we're going to look at the latest Las Vegas home prices, how inventory is changing, what mortgage rates are doing, and what all of this means for buyers and sellers in 2026. Let's start with the big picture. Housing is slowly rebalancing. Over the last few years, we've experienced one of the toughest affordability environments in modern housing history. Mortgage rates jumped from around 3% in 2021 to above 7% by 2023, which dramatically increased monthly payments and slowed housing activity. But now something important is happening. Affordability is beginning to improve. That improvement is coming from three forces working together: mortgage rates easing, home price growth slowing and reversing, and wages rising. And when those three things move in the same direction, it starts to bring buyers back into the market. Now, let's zoom in locally because what matters most is what's happening here in the Las Vegas real estate market. Starting with Las Vegas home prices. As of February 2026, the median price of a single family home in Las Vegas is $481,995. That number's up 2.6% month over month, but slightly down 0.6% compared to last year. So, what does that mean? It means the market isn't crashing, but price growth has clearly slowed down. And this is actually pretty healthy, if you ask me. For several years, home prices were rising at extremely fast rates. Now we're seeing something more normal. Prices are stabilizing. For condos and townhomes, the shift is even more noticeable. The median price for those properties is now 285K, which is about 5.9% lower than a year ago. So different segments of the market are adjusting differently. But overall, the Las Vegas housing market is moving toward balance rather than rapid appreciation or depreciation. So inventory is rising. That's one thing we need to point out. It's one of the biggest stories in the Las Vegas market. Inventory has increased significantly. Right now, there are over 6,100 single family homes available, over 2,500 condos and townhomes available, which is an increase of 17% more single family homes than last year and nearly 24% more condos and townhomes than last year. So, what does this mean? Buyers have more options. For the past few years, buyers had almost no negotiating power. Now we're seeing something different. More homes on the market means fewer bidding wars, more time to make decisions, more room for negotiation. But this is still not a fully balanced market yet. Why? Because inventory is measured in something called months of supply. And right now, Las Vegas has 3.8 months of supply for single family homes and 5.3 months for condos and townhomes. So, generally speaking, 3 to 4 months or less is a seller's market, 5 to 6 months is a balanced market. So Las Vegas is moving toward balance, but we're not fully there yet. I feel that it's more of a buyer's market than traditional months of supply data would tell us. I think once we're at 4 months, it becomes a buyer's market. So you can see how we're pretty balanced right now. Now, here's where national data helps explain what's happening locally. So mortgage rates, they're pretty much the same across the nation, and they're currently near their lowest level in about 3 years. Just 1 year ago, rates were roughly 1 percentage point higher. That difference really matters. On a $500,000 loan, a 1 point drop in interest rates can reduce the monthly payment by about $350 per month. That's real affordability relief. And this is important because housing demand is extremely rate sensitive. Every time mortgage rates move into the low six range, buyer activity tends to increase. So, as rates stabilize, more buyers begin re entering the market. But here's the interesting part: many buyers are still waiting. They're waiting for mortgages to drop below 6%, which happens if you time the day right. But the difference between 6.2 and 5.99 is about $67 a month. So the question becomes, is waiting really worth it? especially if more buyers return and competition increases and maybe prices actually go back up. So, what does this mean for my buyers, sellers, and investors? Look, let's translate all this data down so you can make real decisions. Buyers, this may actually be one of the better buying windows we've seen in a few years. Why? More inventory, slower price growth, and sellers more open to negotiation. When and if rates fall further, buyer competition will likely increase again. You can guarantee that practically. So, the best opportunities often appear before the crowd returns. My sellers, you can still sell homes successfully in Las Vegas. I'm having lots of success there, but strategy is definitely more important than it was 2 years ago. If you're overpriced, poorly presented, or sitting in a crowded price range with a lot of inventory, it's going to take a while to sell. And we're seeing a lot less homes sell in under 30 days than they used to. So today's market rewards pricing and marketing. For investors, you should pay attention to something important. Affordability is slowly improving nationwide, and economists expect that more buyers will re enter the market in 2026 as rates ease and wages rise. That could increase housing activity this year. Not a frenzy, but a gradual recovery. And keep an eye on rental rates, which are still pushing down a little bit. So, what could happen next in the Las Vegas housing market? Most economists expect something like this: mortgage rates stabilize in the low six, high five range. Inventory continues increasing gradually. Buyer activity slowly improves. And if that happens, we'll likely see moderate price growth rather than big jumps or big declines. In other words, a more normal housing market. And honestly, that's exactly what I need and what the market needs after the volatility of the past few years. So, the key takeaway from the February 2026 data and how it affects you in March 2026 is that the housing market's not crashing, it's shifting. Inventory is rising, affordability is improving, buyer activity is slowly returning. And these are the ingredients of a more balanced market. It's boring, I know, but boring can be good. If you're thinking about buying a home in Las Vegas, selling a home in Las Vegas, investing in Las Vegas real estate, or relocating here, I'd be happy to walk you through the numbers specific to your situation, because the best real estate decisions come from understanding both the data and the local market dynamics, the boots on the ground. You can reach out to me anytime. And if you want more Las Vegas real estate updates like this, subscribe to the channel. I post new market breakdowns every single month. Until then, take care and be well.